Okay, all right. So welcome, ladies and gentlemen, and thank you for joining us. Probably we can share the link. Yeah, we can share the link while we are getting started so that they can join us. Yes. Okay, so we are going to continue from where we left yesterday. Yesterday, I think I got kicked. My network was not so good at the end. I hope today it doesn't happen. I see my network also is not that much strong, but I pray that I should be able to do the training. Yes. So pardon me for that. Yes, if it happens that I'm not okay with the network, please just notify me so that we move together. Okay, so yesterday we were looking at the candlestick anatomy, parts of a candlestick. Yes, parts of a candlestick. If you attended yesterday's class, we were looking at parts of a candlestick. Let me just find out what do you remember about the parts of a candlestick? What do you remember about the parts of a candlestick? Just give me some answers in the chat. What do you remember about parts of a candlestick? Yes, I just want to do a recap, then we go for what we need to learn today. What do you remember about parts of a candlestick? Upper shadow. Somebody says upper shadow. Body, upper and lower shadow. The body, the wick, the low, the high, the open and the close. Okay, open and close, body, upper. Okay, body, open, close. Okay, close and open. Okay, I see that. Is that all? Is that all? Is that all? Is that all? The body, the open, the close, the weak. Okay, amazing, amazing, amazing. Okay, all right. So let me wrap up, then we go straight for today's class. Yes, thank you for the amazing answers. I can see that we were together. Yes, I hope I'm still loud and clear. I hope I'm still loud and clear. I'm just making sure that I'm still here because I see my network is not that good today as well. Okay, so we looked at parts of a candlestick. Indeed, the answers that you have given me, they are correct. The answers that you have given me, they are correct indeed. All right, so this is what we looked at, parts of a candlestick. Then we said that the candle should comprise of the body. Okay, it should comprise of the body. It should comprise of the open. It should comprise of the close. It should comprise of the low. It should comprise of the high of the market. Extra, it should also have the wicks or the shadows in some other cases, right? Because I said that sometimes you may have a candle that has got no shadows, okay? That has got no shadows. You may have a candle that has got no shadows, okay? But the main ones should be the body, the open, all right, the close, the high of the market, the low of the market, right? So the answers that you were giving me, They are absolutely correct. So that's what we looked at. That's what we looked at. Then we spoke about the body sizes of the candles. We spoke about the body sizes of the candles. Then we said that some candles, they do have longer bodies. Okay, they do have longer bodies. All right. Some of the candles, they do have short bodies. Okay, so we said that in trading, when the body of the candle is long, there is a message that is conveyed to you as a trader. Then we say that long bodies, okay, long bodies, they tell us that there was a strong pressure in the market. We said long bodies, they tells us about strong pressure. Then we said short bodies tells us about low pressure in the market. All right. Yes. So we looked at the body sizes of the candles. That's what we looked at yesterday. The body sizes of the candles, right? So the longer the body, the stronger the volume, right? Or the stronger the pressure. We looked at that. The longer the body, the stronger the pressure. Okay. All right. So today we are going to look at something different. We're going to look at something different. We spoke about the shadows. Okay. We spoke about the shadows. We spoke about the shadows yesterday. So I just want to give a little bit more information about the shadows, a little bit more information about the shadows. So we are going to take it from there, then we move forward. We are going to take it from there, then we move forward. We're gonna we're gonna pick it from shadows. We are going to pick it from shadows, then we go forward. I hope I'm still in the Zoom. I hope I'm loud and clear. All right. So let me share my screen. Then we get into what we needed to learn today. Okay. All right. Sharing my screen again. All right. I hope my screen is visible. Can you see my screen? Please confirm if you can see my screen. 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 I just want to make sure that I'm still in the Zoom. Confirm if you can see my screen. Okay. All right. Okay. All right. Okay. Okay. All right. So let me come here and talk about shadows. So yesterday I said that shadows, they are part scenarios. You might find out that the candle does not have shadows. Okay, you are going to see a candle that is just full bodied like this without a shadow. In this scenario, when you see a candle like this, it simply means if it is a buying candle, okay, if it is a buying candle, remember the buyers, they open from the bottom, they close on top, right? That's what we learned yesterday. So if it is a buying candle and it is a full bodied like this without shadows, it means the opening price becomes the low of the market. Okay, the opening price where the candle opened in such a scenario, the opening price becomes the low of the market. Where the price closed, the close of the market becomes the high of the market. In a scenario like this, where the candle does not have shadows, right? The same applies to sellers. If this is a selling candle, all right, it is a selling candle full bodied like this. All right, we said that the sellers, they open on top, they close below. Okay, sellers, they open here, they close at the bottom. So in such a scenario, the opening, okay, the opening of this candle becomes the high of the market. Okay, the closing of the candle becomes the low of the market. In a scenario where this is a selling candle, okay, in a scenario where this is a selling candle, so where the body closed becomes the low of the market, where the body opened becomes the high of the market. That is in a scenario where the candle does not have shadows, because you are going to find out that when you go to your trading view, you're going to see candles without shadows. Now, let's come to shadows. Do shadows have important information? All right, when we see candles that are having shadows like this, all right, we said that when the shadow is on the upper side of the body, we said it's an upper shadow. Okay, when it is at the bottom or below the body, it is called the lower shadow, right? So when a candle is having shadows like this, is there any specific information that is important to a trader? Yes, there is very important information. The upper and the lower shadows, okay, they give us important information about this particular trade session. The upper and the lower shadows, they give us important information about this particular trade session. Remember, I said a candlestick represents a trade session. It can be a 4-hour candle, it can be a 1-hour candle, it can be a 1-day candle, but it is a trade session. That's why it is having the opening price, the closing price as well. So the shadows, they give us very important information about the trade session. The upper shadow, let me talk about this upper shadow here, okay? It signifies that the session went high. Remember, when you see a candle with this nature that is having a shadow, okay? So where the shadow ended, okay, where the shadow ended, that becomes the high of the market. You remember when we were talking about the candlestick anatomy with a shadow on it. So the upper shadow signifies, or it tells us how high the market went. Okay, how high the market went when it comes to the upper shadow. Because when you draw your line over here and come to this side on your trading view application, this side there are prices, this side there are prices here, right? So when you draw a line like this, it means it is going to show you how high this session went. That's why we are saying that the upper shadow signifies the session went high, how high the price went, right? Now, when it comes to the lower shadow, as you can see this one over here, it signifies the session went low, how low the session went in that particular trade session. So the lower shadow signifies session low, because where this shadow ended becomes the low of the market. Right. Now, let's come a little bit deeper and find out what these shadows signifies also. Is there any other information that they deliver to us? Okay, so if a candle has a longer upper shadow like this one, can you see this candle? Okay, it has got a longer upper shadow compared to this one. Okay, this one is shorter, this one is longer, the shadow, right? So I'm saying if a candlestick, okay, if a candlestick has a long upper shadow and a short lower shadow, please listen to me. I'm talking about shadows here, and specifically I'm talking about long shadows. Okay, do they carry important information to you as a trader? So I'm saying if a candle is having a long upper shadow and also having a short lower shadow, this means that this candle in this trade session, the buyers flexed their muscle to push the price high. Let me come again. If a candle is having a long upper shadow and a short lower shadow, it simply means in this particular trade session, the buyers, they flexed their muscle high, meaning to say they pushed the price, okay? They pushed the price to this level, okay? Who pushes the price to the upper side? When the market opens and it happens that the market is going up, when the market opens and it happens that the market is going high up, who is pushing the price to the upper side? Between buyers and sellers, who is pushing the price to the upper side? Let me know. Let me know. When the market opens in a candlestick and it happens that the price is going up, who is pushing the price to the top? Who is pushing the price to the top? Who is pushing the price to the top? When the market opens in any candlestick, then it happens that the market is going up. Who is pushing the price up? Between buyers and sellers, who is pushing the price up? I'm checking. I have seen one wrong answer. Yes, I have seen one wrong answer. Copy and paste, copy and paste, copy and paste, copy and paste. Yes, copy and paste, copy and paste. The law of demand applies. Yes, it is buyers. Okay, it is buyers. So that's why I'm saying that if a candlestick is having a long upper shadow, okay, and a short lower shadow, it signifies that in this particular trade session, it is buyers who pushed their price, who pushed their muscle high up, okay? But one reason for another that we may not know, okay? For one reason that we may not know, I would say, for one reason or another, sellers, they came in, okay? In this scenario over here, the buyers opened the market, okay? When the market opened, it seems buyers took over, they dominated, they pushed the price to this high, okay? But for one reason or another, something happened. Sellers came, started to sell until it reached where probably the body has ended there. Let me, if I can go quickly to trading view. I don't know if my trading view will open up, will respond quickly. Let me see. Maybe it may make sense. It may make sense if I come here and explain about these shadows so that you are able to see them in real time. I see my trading view is on a strike. Okay, let me see if this one can open. All right. So this is what I'm explaining about shadows. Let us just use this candle over here, which is a buying candle. Okay, this candle over here. So you can see it is having a long upper shadow and it is having a short lower shadow when you compare the two. Okay, the top one is longer compared to the bottom one. So you can see that when the market opened here, this is where the market opened. The market opened right here. Okay, so when the market opened right here, tell me guys, when the market opened here, which activity took place first between the buying activity and the selling activity? When the market opened right here, which activity took place between buying and selling? Give me an answer in the chat. When the market opened right here, which activity took place first? Was it a buying activity or it was a selling activity? Give me an answer in the chat. Let me come to the chat and see. Let me come to the chat and see. I'm trying to engage you. Which activity took place first? When that candle opened, which activity took place? Which activity took place? Which activity took place? Ivan. Do I have Robert? Jamir. Ali. Yes, Fred. Ndombele. Yes, you guys, I need to give some USDT. I need to give some USDT. Yes, I need to give some USDT. Let me go back to trading view so that people can understand. Okay. So guys, what happened here when the market opened? The first activity that took place was a selling activity. That's why the market came down here. Look, guys, this candle is a green candle. So when the market opened here, sellers started to sell until it reached down here, which is the low of the market, right? Then when they sold up to this level, which is the low of the market, buyers came in, they started buying them out. Right? When they started buying them out until they reached the opening price or the opening place, the moment the price crossed its opening, the moment the price reached its opening, the color of the candle changed. It's like buyers, they went into the territory for sellers. When they were in the territory for sellers, the candle was still red. When they were still in the territory for sellers, the candle was still red. But immediately when they come to where the ball started, this is the center now, where the ball started, the moment they cross the opening, which is the center of the price, then buyers started painting this candle with green because they overpowered the sellers. So the activity that took place here first, it was a selling activity. All right, it was a selling activity. Now buyers, they flexed their muscle up to this level. When they flexed their muscle up to this level, sellers, they came again and say, we are not dead, we are still here. Okay, sellers, they came, they told the buyers, we are not gone. Even though you took the ball from us, we are not gone. Then a selling activity started to happen. Until it reached this level. Unfortunately, if I may say so, the sellers could not come back to the center where the price was open. So in this particular trade session, the price closed here. That's why this candle is still green. It ended while buyers were still dominating. Am I making sense, guys? Are you learning? Are you learning? Are you learning? Are you learning? Are you learning, guys? Are you learning? We are talking about long shadows. Somebody is confused. Somebody is confused. Okay, let me help some people to mute here. Let me help some people to mute here. Yes. Okay.
Oh, we can't hear you. We can't hear you. Leader, come back and unmute.
Am I back? Can you hear me now?
Sure.
Okay, sorry
Yes,
for that. I don't know what happened. Okay. Okay, let me come back here. So I'm talking about shadows here. This candle, the upper shadow is longer than the lower shadow. So in this scenario, it is buyers that flex their muscle to the top. They push the price. Buyers, they push prices up. Sellers, they push prices down. Okay? So when you see a market doing like this, doing like this, doing like this, doing like this, okay? Where it has gone high up, it is buyers. Where it has come down, it is sellers. When it goes up, it is buyers. When it comes down, it is sellers. So sellers, they push the price down. Buyers, they push the price up. So in this candle, it is buyers who pushed the price to this level. There is a price this side, right? But when they push the price so high, some of the traders within this candlestick, they pushed their take profit. That can be me and you trading with Royal Q. Our 3% was achieved within this price increment over here. Then we started selling, taking our 3%. We started selling. Unfortunately, we could not overtake buyers. We couldn't overtake buyers. Yes, there was a selling activity here, but we could not overtake buyers. At the end, buyers were still dominating. That's why this candle is still green. So I'm saying when a candle is having a longer upper shadow and a lower shadow, I mean a short lower shadow, it means that first it is buyers who dominated, who pushed the price high. But at the end of the trade session, it could not remain high. Sellers, they came in, they sold up to this level. So the creation of this upper shadow, which is long like this, it was done by buyers because they pushed the price to the top. The creation of the upper shadow here, it was created by buyers because they pushed their muscle to the top. But at the end, they could not remain at the top with the price. Sellers came in, brought them down. Are we together? Are you understanding about the upper shadow, the long upper shadow? Are you understanding it? How shadows become, how shadows are created. Are we together, guys? Give me a yes if you are following. I want to go to the lower shadow. Okay, I want to go to the lower shadow. I want to go to the lower shadow. Okay, let me come back to trading view again and look for a candle that is having a long lower shadow. Which one should I use over here? I want a candle with a long lower shadow. Okay, so that my class can come home. Let me look for another coin over here. Let me see. Let me look for another coin. I'm looking for a candle with a long lower shadow, right? Okay, let me take this one. Let me take this one. All right, let me take this one. Let me use this candle over here. Let me enlarge this one. This one. I want to use this candle. This one over here. Okay. So this candle is having a long lower shadow and a short upper shadow. All right. So when the market opened, okay, when the market opened, when you look at this candle, I'm talking about a candle with a long lower shadow and a short upper shadow. In such a scenario like this, first of all, it means that the sellers, they flexed their muscle. Okay, they flexed their muscle to this level. I said that sellers pushes price down. So in such a scenario, there was a selling activity more than a buying activity. That's why the price came down here to this level. If we are to draw a line, there is a price here. So in such a scenario, sellers were in control. Now, even though the sellers managed to bring this price to this level, buyers, they said, we are still here. Though you are in control, but we are still here. Then buyers started to buy from here. They started to buy back. They started to buy back. Unfortunately, even though they managed to buy up to this level, but they could not come to the opening where the price opened. I said that sellers, they opened from the top, they closed below. So in this candle over here, sellers, this market was opened above the body of this candle. That's where the price opened. It came down to this level. Then buyers came in, started to buy, started to buy, started to buy. Unfortunately, they could not come to where this price was opened. They managed to push the price up to this level. That's why you see that this candle, it is still red because sellers dominated in this candle. If buyers could manage to come on top here, where this price was opened, you could see that this candle could become green. But buyers could not surpass the opening price. That's why this candle, it is still remaining red. So sellers, they dominated in this session. So a candle with a long lower shadow and a short upper shadow, it means sellers flexed their muscle in terms of selling. There was more selling pressure compared to buying pressure. Are we together, guys? So in such a scenario, candlesticks with long lower shadow signifies buying pressure. Don't get confused. I'm coming home now. I'm coming home. When you see a candle with a long lower shadow, it signifies there was buying pressure. When you see a candle with a long upper shadow, like this one over here, can I minimize my screen a bit? Let me minimize my screen. When you see a candle like this one over here, who was doing the activity here? Tell me, who was doing the activity here? Which pressure is this one? Which pressure is this one? Yes, I know. Someone is going to say buyers, just because buyers, they are the ones who push the price to this level, right? But you can see that there was a selling activity. This shadow signifies there was a strong selling activity compared to buying activity. Because at the end of the session, who dominated here? Who dominated here? At the end of the session, who dominated? So this is a signal that there is selling pressure here. This is a signal that there is buying pressure. So can you see what happened here? Because of this buying pressure that happened in this candlestick, the next candle, buyers, they came with energy. They pushed the price. Can you see? Because of this signal over here, you can see the next trade session, buyers dominated, as you can see. Does it make sense, guys? Does it make sense? Does it make sense, guys? Are we together? I'm still on shadows. I'm still on shadows. Give me a yes if it is making sense, because I want to leave this page and come to another page. I have overstayed here. I have overstayed on shadows. So shadows, they give very important information to you as a trader. When you come and start analyzing the market, after finding out which trend of the market was it, now look at the candles that have been created, okay? What message are you finding in those candles as a trader? That's why we want to know the language of the market. so that we are able to become good traders. When we understand the language that the market is speaking, the market speaks a language. The buyers and sellers, they have got a language that they use. So for us to join them, we need to understand this language. That's why we are doing candlestick chart patterns. So before we go to candlestick chart patterns, we need to know one candle first. Before we know a couple of candles, let's know what is embedded in one candlestick. I think we are together. Now, let's come to candlestick chart patterns. Like I said, candlestick chart patterns. I'm moving out of here. Somebody did not understand about the upper shadow and the long. Is it the short? The short. Let me see. Okay, longer and upper. I said that. Let me bring my screen again here. Let me bring trading view. When a candlestick is having a longer upper shadow, first of all, when the candlestick is having a longer upper shadow like this, it simply means it is buyers who push the price high up, because buyers, they open from the bottom, they close on top. So a candle with a longer upper shadow, first of all, what you need to know is that the pressure that pushed this price to this top, it is buyers. It means that buyers flexed their muscle high. Okay? But by the end of that trade session, there was a selling activity. Buyers could not maintain the price on top like it went. Sellers came in, they started selling, they started selling, they started selling. That's why you see the creation of the longer upper shadow. First of all, buyers pushed the price high. Secondly, sellers came in, they pushed the price down. That's why there is a creation of a longer upper shadow. So the longer upper shadow signifies selling pressure. There was selling pressure in the market. The moment you see a candle, the upper shadow is longer than the lower shadow. You should know that in that candle, there was a lot of selling compared to buying. Okay? But when you see a candle that is having a long lower shadow and a short upper shadow, it simply means, first of all, it is the sellers who push the price down. But by the end of that trade session, sellers could not maintain their position. Buyers came in, they pushed the price high up, they pushed back probably to the opening. So this pushing of price to the top, it has created a long lower shadow. So this means that this was a buying pressure, this was a selling pressure. Are you getting it, guys? The person who said I should repeat about the upper shadow and the lower shadow. So this is signifying buying opportunity. This is signifying selling opportunity. That's what it means when you see shadows like this. So wherever you see a candle with a shadow, there was a selling activity, there was a buying activity in simple terms. But what you need to look at, how long are the shadows? Whether it is an upper shadow, whether it is a lower shadow, how long are they? Because that's where the message is hidden. Okay. Can I proceed, guys? Can I proceed? We need to touch something. We need to touch something. It's already 20 past. We need to touch something. Can I proceed? Can I proceed? Okay, thank you so much. So let's proceed. So I said that when the buyers and the sellers, they are doing their stuff in the market. When buyers and sellers, they are doing their stuff in the market, they are talking. There is a language that they are using. Okay? They leave a mark in the market. What they did yesterday, they might do it tomorrow. So for us to be able to understand how these guys communicate in the market, we needed to come and learn this language that they use to speak. Because if we do not understand this language, we may not know. The moment we open our trading view here, okay, the moment we open our trading view here, we are going to see Greek here. We're not going to understand what's happening here. So we needed to learn this language. When we see candles, okay, creating a pattern like this, what does this mean? So we need to come and learn this pattern. That's why we want to understand the candlestick chart pattern. But before we know that, we needed to know what is hidden just in one candle like this. What happened in this candle when it is like this? That's why we were talking about the candlestick anatomy. Now we want to know about a couple of candles that have formulated a pattern. When we understand this pattern, then we are understanding the language of the market. We are able to interpret what happened today might repeat itself after 2 weeks. Are we together, ladies and gentlemen? So welcome to the candlestick chart pattern. Candlestick chart pattern, it is a powerful, yes, it is one of the powerful trading concepts, okay? Candlesticks, they are really simple, they are easy to identify, and also they are very profitable. Let me repeat that. Candlestick chart pattern. When I say chart, I'm looking at a couple of candles. For example, if you look here, if I minimize my screen like this, you can see that this coin has been on a downtrend for some time. Okay, if I minimize my screen like this, can you see this coin has been on a downtrend for some time? All right, you look at the trend, look at this trend. If we may even just take it from here, okay, you can see that though there was some ups and downs, but this journey was a downward movement. So you can see this trend, it is a down trend. Now, when the market is going down like this, it creates patterns. It creates patterns. So when you look at these patterns, you are going to find a message that is hidden in it by looking at how these candles are forming. That's why I'm talking about the candlestick chart pattern. So a compilation of candles, okay, a format of candles, it is called a chart pattern. That's what we want to look at. All right. So this chart pattern, it is a language of the market. When you find it and you are able to interpret it, you will discover that it is simple to find it because it always repeats itself. Okay, not only that, it is also easy. Robert, can you stop helping me typing on the chat? Yes, thank you. It is not only simple, but it is also easy to find. Okay, not only easy, when you find it, it is profitable. It can give you profit. Yes, it is profitable. A candlestick chart pattern, it is simple, it is easy, and it is profitable. Are we together, guys? I'm moving slowly before we start looking at different types of chart patterns. All right. So these chart patterns, they are signals. They signify a particular trend, or they signify a particular power or a particular pressure. These chart patterns can signify that the market is going up. These chart patterns can signify the market is going down. That's why I'm saying, if you understand these chart patterns, they are profitable. You are able to know that this chart pattern is signifying us that the market is starting to rise. So it is giving us an opportunity to enter so that we can collect some profit. At a certain stage, you are going to see these chart patterns. They will signify that now the market has done going up. It is now coming down. So if you are still in the market, it will find you an opportunity to exit the market, because now the market is preparing to come down. So you can use this as a trading concept. Are we together, ladies and gentlemen? So chart patterns signifies what? Chart patterns signifies what? It signifies whether the market is going to go up, whether the market is going to go down. So these are signals. In short, chart patterns are signals. Yes. Can I proceed? Are we together? Can I proceed? I'm moving really very, very slowly. We've got still 1 more week to go. I believe that by next week, I'm going to exhaust the lesson of candlestick chart pattern, and my mentor will come and take over from there. Okay, so we still got 1 week to go, which is next week. So I'm taking you very slowly, because when other lessons start to come, they are going to be built on top of what I am building now, which is a foundation. So if you miss this, if you fail to understand this, then the next trainer, when he comes, probably you'll be hearing Greek. You're not gonna understand what's happening. So please confirm if we are together on the candlestick chart pattern, because I want us to look at one candlestick chart pattern, and probably we may call it a day. Then we'll meet again tomorrow. Yes, I want to introduce one candlestick chart pattern. The few minutes that I'm left with, I want to introduce one candlestick chart pattern. Okay, all right. So let's come over here and look at one candlestick chart pattern. Let's come over here. Let me share my screen and look at one candlestick chart pattern. All right, let me share screen and bring one slide. Okay, so let me come here. Should I start with the bearish or I start with the bullish? Okay, let me start with the bearish. Let me start with the bearish. Okay. So when you come to your trading view, when you look at the pattern, you are going to find out one of the patterns that you may find. It is this one. It is called a bearish engulfing bar. It is a chart pattern. It is a chart pattern that signifies that the market is going to go down. Sellers are going to push the price to the bottom. Remember when I was talking from the beginning, I said that one of the ways that you're going to hear is bears and bulls, right? So this one, it is a bearish engulfing bar. It means it is the sellers that creates this type of a pattern. It is the selling activity that creates this type of a pattern. Now, let's look at how it is composed. Okay? Let's look at how it is composed. So when you look at the bearish engulfing bar, it is one of the most candlestick chart pattern that you are going to find in the market. Okay? So it consists of 2 candles or 2 bars. Okay? Can you see we do have 2 candles here or 2 bars? So you can see that the first body or the first bar is smaller than the second bar. Or the first bar is shorter than the second bar. Do you remember when we were talking about body sizes of the candle? Okay, when we were talking about body size of the candle, are you connecting now? So this candle, in terms of body size, is smaller compared to this one. What is the message being conveyed here? When you look at this, you will find out that the market is coming from this direction. It is coming from the bottom going up. Now it has reached a level, okay? It has reached a level. We are going to start learning about support and resistance levels after these classes, right? So it has reached a level where the market needed to come down. It is being resisted. Price is being resisted here. So when the market has moved from low to go to high, and it has done 100%, in most cases when we are looking about the reversing of the market, okay, the reversing of the market, it means there is a 100% move that the market has made. So the market is coming from this level, it is going up. When it was going up, who was pushing the price? Buyers. So they reached to this level. Now buyers, they can no longer push the price more up. That's why you see this candle is smaller compared to this one. Buyers are tired. They are tired to continue pushing the price high up. Their muscle can no longer hold them. Then you are seeing that in the next session, sellers have started to appear to take the buyers out of the market or out of control. So in this scenario, when it comes to bearish engulfing bar, to engulf, okay, to engulf is to cover. You can see that if you were standing here, okay, if you were standing here, you are trying to look at this side. You could not see it because of this candle is longer than this one. So this candle is engulfing this one. In this scenario, sellers are engulfing buyers. That's why this chart, it is called a bearish engulfing bar. It comprises of the small body candlestick, okay, and then the big body candlestick. Yes, the opening and the closing of these candlesticks, they are there. But I just want you to look at how this looks like. The bearish engulfing bar, it comprises of two bodies. So in this scenario, I'm saying the market is coming from this direction, going up. It has reached there, that top of the hill. Now it is time to come down. Remember, when the price shoots up, it also needs to shoot down. A selling activity should happen. So when the market goes up, don't expect that it will continue to go up. It needed to retrace if there is that need for it to continue to go up. Or otherwise, it needed to come down 100% again. So in this scenario, bears, they are coming in the market. They are showing their muscle that enough is enough. So they want to push the market back down there. So when you are able to read this, you will be preparing to exit the market if you were trading this particular crypto when the market has gone high up. Are we together, ladies and gentlemen? Are we together, ladies and gentlemen? Are we together on the bearish engulfing bar? On the bearish engulfing bar, are we together? This is a market reversal signal to the downside. A bearish engulfing bar, it is a market reversal signal to the downside. It signifies selling pressure. It signifies selling pressure. So when you come to your trading view here, okay, the areas that you need to focus for you to see an engulfing bar, which is a bearish one. For you to see an engulfing bar, which is a bearish one, you should look at a moment when the market has shoots up, yeah, when the market has shoots up, when the market has gone high up like this, it has moved from bottom to high. Where the market has gone highest, check around this area. What type of candles are you going to find there? Okay, what type of candles are you going to find there? If I may enlarge my screen like this, are we able to see something similar like engulfing? Are we able to see something similar like engulfing? It may not be a perfect one. When you look at this position here, it may not be a perfect one, of course, but it looks similar. If I may try to find one quickly, I'm not sure. If I may try to find one quickly, let me look for, let me check pros. Okay. I know we're going to come here when we are done with the patterns. We're going to come and look at them. We're going to come and look at them. All right. We're going to come and look at them. We're going to come and look at them. Let's see where the market went high. Where the market went high. Okay, it is another journey. It's going to take our time. It's going to take our time. But what I'm trying to put it to you is that for you to identify a bearish engulfing bar, look where the market has gone high. When it has moved from the bottom, it has gone high up. Check around this area, which is called resistant area, because that's where the market is being resisted to come back down. So check along this area. What language is being spoken here? Between the buyers and sellers, what are they saying? Is the sellers saying buyers enough is enough, we need to come in? Check around here. When the market has gone high up, what type of candles are you seeing here? Is it engulfing bars? If they are engulfing bars, are they bearish engulfing bars? Because we are going to look at another engulfing bar, but it is going to be a bullish engulfing bar, which is the opposite of bearish. So a bearish, it is a market reversal signal to the downside. A bullish, it is a market reversal signal to the upper side. But we're going to go into bullish tomorrow and do it in detail so that we bring justice to these two market reversal signals between bullish and bearish engulfing bars. Questions? I want to close. Do we have questions? Do we have questions? Any questions, ladies and gentlemen? I'm ending the class. Any questions? Any questions on what we have learned, what I have taken you through? If you are having a question, please shoot it in the chat, or you can raise your hand and I'm going to allow you to unmute. Just a few minutes. Somebody says it was tough today. I'm not talking about the indicators. Someone is saying indicators are refusing to come in the chat. Why are you putting indicators? Myself, I'm talking about chat patterns. Says it was tough today. You're going to be strong, guys. You're going to be strong. It was tough today, right? I think it's going to be more tough tomorrow because I'm going to go deeper. So you need to allow your mind to open up more. The usage of the bearish engulfing bar, when you see it, it tells you that the market is going to change direction to the downside. That's the usage. The reason why you need to know the bearish engulfing bar, when you see it, it means the market is going to move from top, it will go down. Because the bearish engulfing bar mostly is found at the top of the peak. When the market has gone high up, it's when you are going to see a bearish engulfing bar. Yes. So if you don't see a bearish engulfing bar, tomorrow we're going to look at other chart patterns, because it's not only bearish engulfing bars that are in the market. There are other also chart patterns. So we are going to explore them one by one, but you need to know that it's either it is a reversal signal to the upper side or a reversal signal to the downside. So when you know these chart patterns, you are able to know when should you prepare to enter, when should you prepare to exit. And that will be concluded using indicators as well to confirm your entry, to confirm your exit. That's why I'm saying I am building a foundation. My coach will come and then build the full house on top of the foundation. Is that clear, guys? When you are learning to draw support and resistance, you are learning to draw support and resistance on candles that you know of, on chart patterns that you know of. That's what I'm trying to build here. Okay, I think it's enough for today. I don't know. Crypto mentor, Coach Julius, anything? Any announcement?
Yeah, sure. Just one. Uh, could we drop some love hearts, some thumbs up to Coach Mopiwa? I just want to do one. Can we drop some love hearts, some thumbs up to Coach Mopiwa? Just share my screen, run very fast. I would expect the following to happen if tomorrow, rumors has it that the former CEO of Binance, none other than CZ, will appear on the crypto conference in the White House tomorrow. But I want to just drop a clue about what I expect. I'll just put this on a bigger time frame, like one day. Those who can be patient, if you are a patient trader, get this off. If you are a patient trader, you are patient. Okay. I'm speaking to patient traders. I'm not speaking people who are chasing money. If you are a patient trader, I'll just draw some lines. Basically, to save time so that I do not spend a lot here, if it happens as it is said it will be, I just need to keep my statement like that. If it happens as it is said it will be, that the United States of America is going to press in XRP as one of the coins. If it happens as it said to be, I'm not sure about that statement, but if it happens as it is said, why is my cursor not working? If it happens as it is said, that the United States of America is going to put XRP on its reserve currency, then I will expect XRP to break this resistance that is here, which when we go in a lower time frame for learning purposes, just it looks like it is possible for XRP to break that high, basically, in the 4-hour time frame, because I told you when the MACD forms a golden cross in the green histogram area. Usually the coin goes up. XRP can dominantly be able to hit its previous new all-time high, which is $2.9, which if you could be a patient trader and get into this trade right now and take a long trade, this could give you not less than 15%. But if we take the ability, because guys, the coin has already broken my resistance, although it is not a confirmation. If it happens, and it's true, because I'm not sure about the statement, then we could see XRP break its previous high, which was basically from this point here. If you could go long term about this coin, then we could say XRP give not less than a 30% in profit. Number two, we shall look at Cardano, ADA, USDT. It's one of the cryptocurrencies that are in the American made category. If you're also a long-term trader, I'm not talking about short-term traders. If we press back indicators like the auto fib, it is just forming a retracement. The downside after rise to the upside. But if it is true, my statement lies on that. That Donald Trump is considering Cardano. If you could go long term about the trade, let me press it in a bigger time frame, like 1 day. This is just a simple retracement that can be maintained by the trade. Then by longevity, from the current price of this coin, this could also give you another between 20 to 15% from where it is. It has done it in the past. So you see, Charles Hotcon says he knew nothing of ADA being selected at the US Reserve. Guys, if this reserve thing is gonna work, you have nothing to lose, because if you could go and press it any amount of money in these coins of ADA, XRP, and maybe Solana, and you stay on them for long term, all right? They are not the best blue chips, but they are blue chips since they are United States made. Then I'll take Solana in 1 day. Solana has been a very strong trade, guys, just recently because of retracement. If we look at it by long-term mindset, long-term, okay, if it is added on the reserve from its current price, okay, the minimum could be also another 15%. That is minimum performance. Then this coin has the ability to give you close to over 74%, which is not even looking at the previous year. I'm talking about 2025, which means, guys, this coin could go back to $300, which would be close to giving you close to 100% return on investment, meaning it has the power to double your money by 2. Just this year, if this coin gets back to, if it is put up by reserve, meaning it has the power and ability to double your money. But I see Solana hitting $1,000 in this cycle because of high usage. The other cryptocurrency I'll talk about is Ondo, which is a real world asset. But like I usually say, these are just categories. Okay, so I'll pick any. So let me go with Bybit. I'll pick Ondo. Those of you who speak Luganda, I hope I'm gonna get back to my Luganda lives. And those of you who speak English, I'm opening up a TikTok channel for the English speaking community. where I will be speaking crypto in the English version. Since we are international, I believe it is important for us to deliver the message across all levels. So I'm going to open up a TikTok channel for English today. All right. So this could give you another 80% from its return from its previous new all-time high. So maybe you could buy because uh, this could give you 80%. I don't know when, but in the next 3 to 6 months, this is possible. It will give you that return on investment. And this coin is very new to the market. It's not an old coin. So that's what I think. Those three, if you look at XRP, I'm taking Ondo because the government of US is investing there. I'm talking about longevity. But listen to me very critically about this statement. When XRP can do a 30%, then Hedera can double that money, right? Just for learning purposes, if we could go long term on this coin on Hedera to its all-time high previously made, okay? So we shall look at this. If you could go long term means it will take some time to break its this high. The minimum by the rise could give you a 15%. That is minimum. When XRP is talked about, am I speaking to someone? When XRP is talked about to be given a reserve policy, the minimum you'll make is a 15%. The maximum will be a 60%. And this happened this year. I'm not talking about this happened in January. History is going to repeat itself. It's a 61%. IOTA. IOTA can outperform XRP in performance when XRP gets that. Let's take IOTA. Recently, it made very strong partnerships, all right? So if we break its previous all-time high, if you could be a long-term trader, you decide to go in long-term patience. I told you make some money, then let's take IOTA to hit price from its current price. If we could check the date or when this happened, this was December 2024, guys. So minimum when XRP gets a reserve policy, the minimum you can make from this coin is more than 30%. But the maximum you can make when you go long term, this coin could give you a return on investment of 180%. I'm speaking like lingua, but I'm telling you facts, guys. The history is about to repeat itself. All right. But the minimum when XRP gets a reserve, these coins that sit in the same category, okay, this is a coin that sits in the same category. The minimum you can make on this rise will not be less than 20%. So when XRP gives you 10%, IOTA will give you a 25%. XLM will give you another. So, guys, usually cryptocurrencies that have a low market cap in a certain category will always outperform cryptocurrencies with a high market cap. So, when we look at this category of Algo, HBAR, XLM, XRP, IOTA. So, if you want to go long term, then IOTA, Algo, HBAR, XLM will outperform XRP in performance if you're looking for money. But that doesn't prevent you to spread your money, right? Hope I've done my part. So if you could go to your Royal Cube, buy a coin and pause it, then you will not regret your decision. Am I clear? Am I clear? Okay. So you have two choices. You can go long term um, by pausing the coin. That is number one. Number two, you can go long term by using RSI on cycle. Am I speaking to somebody? Okay. But this is going to happen tomorrow. This is going to happen tomorrow. when XRP gets that talk about, when Solana gets that talk about, when ADA gets that talk about, these coins will get a sharp rise. Okay? They will get a sharp price, guys, like nobody's business. And if you are chasing money, then go in and take that 15%. If you are chasing money, then go in and take that 20% respectively. If you could take 15% on all those coins, you could take, especially IOTA could give you that 15%, HBAR could give you that 15%, XLM could give you that 15%, although it is XRP, because the whole category will do well. Am I speaking to somebody? But also ADA could give you that 15%, XLM, XRP could give you that 15%. If you are chasing money, go set up these coins, give them a 15%, only 10% or 5%, it's up to you, depending on your fear. But if you want to make money long term, you could also go Cycon, RSI, or you could buy, post, and keep. Is my message. Go to your Royal Queue, buy the coin, tap on pause. Buy the coin, tap on pause. Go long term on the coin. They have ability to give a return on investment of over 180%. 108%. All right? Love you all, guys. Have a good day. See you on the next calls. I promised you a video yesterday. I failed because I arrived very late at home. Okay? I arrived very late at home. Right? But I'm gonna work on it. Thank you, everybody. Have a good day.